Welcome to In the Hot Seat with the Tenney Group. I'm Spencer Tenney. It's good to be with you. Today we have Kim Beck, Vice President of Cottingham Butler. So excited about this. Kim, welcome.
Thank you. Thanks for having me. Happy New Year.
Well, thank you. So before we kind of heat things up here, why don't you just take 30 seconds and just give us the high-level overview of what you're doing over there at Cottingham Butler?
Sure. Well, our company focuses on a number of different insurance-related services. I work on the benefit side and primarily with trucking companies, helping to manage their benefit programs, cost structure, health, wellness, everything related to recruiting and retention in terms of how they structure their benefit programs.
So complex and so many things of where this could go, but let's just jump right in there. So over the last couple of years, what have been the biggest trends as it relates to compensation and benefits in the trucking industry?
Over the past couple of years, we've seen a huge shift in terms of focus on pay and also benefits in general. But I think pay has been the biggest thing, and that's no secret to any of you that are in the transportation industry. We've seen upwards of a 20% or more increase in overall compensation, especially with drivers. And on the benefits side, I would say, we've seen pretty steady movement, if you will, in terms of what employers are doing and offering for their benefits. They're not making a lot of changes over the last couple of years. Costs are still rising. That hasn't changed, especially on the prescription side. It's a little bit out of control. So we've seen a lot of new aggressive strategies and new vendors coming into the space on the prescription side. We're seeing some really interesting changes in terms of, I saw Chris Spear on Fox News this morning from ATA talking about the huge driver shortage that we have. And that's obviously playing into what's happening with pay and benefits as trucking companies are struggling to try to figure out how to recruit and retain. We're 80,000 drivers short. So all that said, we're seeing motor carriers making changes to the benefits that they're offering in terms of how long someone waits to get on their benefits. So we're seeing shorter waiting periods for benefits. That has been a big one over the last couple of years. While costs are going up, they haven't gone up as much as they had prior in terms of trend. And I think largely due to the fact that COVID really stopped a lot of elective procedures and routine care from happening for 12 to 18 months. So while medical plans saw a decrease in utilization of overall claims on their medical plans, they've seen an increase in some of the severity of the claims that do happen. So the good news for the trucking industry is we've seen much less frequency of critical inpatient COVID claims. I think a lot of that has to do with the fact that drivers are social distancing and isolating naturally every day in their trucks. So they're, in theory, I guess, not exposed as often as a normal person out in the workforce. However, we are seeing some really expensive inpatient COVID claims happening, anywhere from $50,000 to over $300,000 per inpatient stay for those that do happen. So the ones that are getting hit with those are seeing some heavy catastrophic claims, but for the most part, they're seeing overall costs down, and we're starting to see that shift up again. So over the last couple of years, costs have been steady. And, we do an annual survey every year of compensation and benefits related to trucking. And for the first time in over a decade, the last 2 years in a row, we saw very little movement in terms of what companies are doing on their medical plans with deductibles, out-of-pockets, co-insurance, co-pays, and even what they're charging has stayed pretty steady. I think just because they're trying so hard to not upset the apple cart with their drivers and offer as competitive of a program as they can.
So let me just kind of unpack that for a second, because you provided a really good backdrop between driver shortage, between the pandemic. So what have you seen evolve just in terms of the way that trucking companies are managing their benefits? What's evolved over the last 2 years?
That's a great question. I think one of the biggest things is just telemedicine. It went from, maybe half of companies having a telemedicine offering through their medical plan to almost all of them. So you can have a doctor visit virtually now. And also just in the strategies around enrollment and how people are enrolling in their benefits. Almost all of our trucking clients now are offering the ability to enroll in benefits virtually, either through their benefit administration systems online, call center solutions, mobile apps. Most have gotten away from paper, and that has been a big shift. But I would say that the biggest thing over the last couple of years is just COVID. That's new. I mean, now we have COVID claims, we have testing, we have services related to, those that are sick with COVID. And so now we see new reporting available on what's happening with COVID claims. And the same is true for not just medical, but also disability, short-term disability claims related to COVID as well, and how those are being handled. So it's been interesting.
I can only imagine. So we're talking about COVID. Vaccines are a huge topic within our industry here. So do you see many companies implementing contribution surcharges for unvaccinated workers?
That is a really hot topic. And I've been getting a ton of questions on that over the last several months. Thankfully, last week, when the Supreme Court blocked the vaccine mandate, it put a lot of people at ease in terms of what they're going to do related to vaccines and mandates. While some may have been for that and others against it, I think the general majority of our clients in the trucking industry did not want to see that happen. Drivers tend to be very cynical about having a company mandate anything that they do other than what they're supposed to do for their jobs. So having someone tell you that you have to get a vaccine was not going to go over well. And fortunately for trucking, drivers were supposed to be exempt from that anyway. So that also helped a couple of our clients breathe a sigh of relief. But with regard to the medical plans and what companies are charging, I don't personally have any clients that have a vaccine surcharge or a surcharge for non-vaccinated individuals on a health plan today. I know Delta Airlines made national news, and that's transportation related, with their charging $200 more per month for anyone who wasn't vaccinated for their health plan. I've had lots of customers and even trucking companies that aren't clients of ours ask me about that. And how to go about it if they want to do it. Some that are definitely considering it, others that were considering it. And then the mandate happened and they thought, well, that just did it for us. So we don't have to, maybe build a surcharge because more people are going to get vaccinated. Now that was blocked, I think there will be interest generated again. But sorry, long-winded answer there is very, very few of the trucking companies that we've talked to are doing anything with surcharges. Now, we are seeing incentives and reward-based programs. So if you get a vaccine and you're part of a health or well-being lifestyle reward program that they already have, you get extra points for that, or a gift card or a cash incentive. But no one that's doing the surcharge in our client base as of today in trucking. Some non-trucking clients that are. Because you know what? Statistically, if you're not vaccinated and you get COVID, you're more likely to have a more severe case of COVID and end up hospitalized. Whether you believe that to be true or not, statistically, it's true. So we do have customers that are saying, hey, it's going to cost us more in our health plan. We think we should be able to charge more for it. Problem being, what about natural immunity? And then how are you going to handle the boosters and the ongoing management of a program like that? So for those reasons, many of our clients have just said, yeah, we're just going to let that be a personal choice and hope for the best.
That is fascinating. We're talking about all the things in terms of vaccine, all of these new issues that we're having to address within this industry. But still, there was already a very huge issue around just the average worker within trucking being quite a bit unhealthier than the typical American worker. So what's happening there in terms of what are you seeing clients do to manage the cost of the folks that kind of fit that profile, that are a little bit on the unhealthier side, to manage costs, to get the right benefit program in place?
That one's a tough one. Again, no surprise to any of your audience, I'm sure, but poor health and lifestyle choices in the trucking industry is something that's just no easy task to try to manage. We know that the average age of a truck driver is 10 to 20% higher than the average age of the workforce in general, especially on a health plan. And they're living sedentary lifestyles. They have, they can't just easily pull over a truck and park somewhere and go inside of a healthy restaurant or grocery store and get food the way the rest of us can. And whether that's an excuse or not, it's just what it is. But over the years, we've seen a huge spike in diabetes within the trucking industry, with drivers especially. High blood pressure is obviously an issue, and obesity. And then, not so much recently, but I think more of a spotlight area is OSA, or obstructive sleep apnea. So that can be a huge issue when a driver goes in to have their DOT physical and they're checking boxes and answering questions, and suddenly they're flagged as a possible sleep apnea risk and they need to go be tested for that. It causes issues with having their certificate issued for their CDL. So with diabetes, high blood pressure, and sleep apnea being really what we see as the top three challenges related to just them being even able to drive their truck because of their CDL, then you have all of the direct and indirect costs of those conditions being so prevalent within the trucking industry. So now with COVID especially, we know that two of the top factors related to critical COVID cases are diabetics and those that are overweight, which is a lot of our truck drivers. So we need to keep them safe from COVID as well. But over time, trying to figure out how to manage those programs has not been something that we've had a success with in all cases, but in many cases where we found the greatest success, we know that traditional wellness programs are not working, at least not with trucking. They don't respond well to flyers and mailings. They're not going to change their life because you're sending them information necessarily. Gym memberships don't work. So we've kind of taken the approach of accountability-based programs are really the most cost-effective and most successful way to manage poor health and lifestyle in the trucking industry. So for us, some of those programs include condition management is a big one, where we target those with diabetes, high blood pressure, even high cholesterol if we have the data, sleep apnea in some cases, obesity. And when I say target, I don't mean that we're singling them out in a negative way, but we're identifying through claims data those with those conditions and putting in programs that will help to manage them to at least be compliant with their protocols of care. So we found over the years that, and I'll just pick on diabetes because it's probably the most costly condition to have over time. And it's the leading cause of blindness, which obviously is going to impact a driver's ability to see and drive a truck. It's the leading cause of non-injury related amputations, heart attack, stroke, kidney failure, and stage renal disease. These are really expensive, catastrophic situations that can be avoided just by maintaining proper health and being compliant with medications, having your blood checked once or twice a year, taking your medications as prescribed. And it's absolutely mind-blowing to me how many people don't do just the basic things they're supposed to do with a condition like diabetes. So when we look at a group of drivers, for example, and their claims over the past 12 months, 18 months, we can see how many of them are having their doctor visits, how many of them are having their A1C tests, how many of them are filling their prescriptions, how many of them are having their lab work done, and whether or not they're compliant. In an annual diabetic vision exam, even, most people aren't having. Less than 3% of diabetics on a health plan where we can analyze the claims are actually compliant with those 5 or 6 protocols of care, which is just staggering. So the programs that we put out there that work the best target those conditions and manage the compliance piece of it. So if you're not having those things done, then something happens, whether it be you're going to pay more money for your health insurance, or you're going to start paying more for a deductible or out of pocket. We can also put reward-based programs in. It doesn't always have to be the stick. It can be a carrot, giving them their medications free if they're taking them as prescribed and doing all the things they're supposed to do, gift cards and other types of incentives and programs. So that has been the big one for us on the medical plan side. Indirectly having these poor choices and poor lifestyles in the driver industry impacts productivity, obviously, work comp claims and risk. The medical claims are an easy one. I mean, an out of control or unmanaged, improperly managed diabetic costs 4 times more than a properly managed diabetic. So someone who's doing all the right things versus someone who isn't, there's a huge delta, 4 times higher costs related to that. Same with work comp injuries and how long they're off work if they have a condition that's poorly managed. So, aside from that and the new COVID risk, for those people with those conditions and the costs related to that or death risk, it's a big deal. So I think you have to be doing something, but just know, drivers are motivated most by money. So having programs in place that impact their paycheck will make them take notice and typically will help them to take action.
Have you noticed that there is a particular profile in terms of size of the fleet where these accountability programs tend to be a good fit for?
That's a really good question too, because in some cases where it is a smaller fleet, if we can't get access to the claim data or integrate a program where nurses can, see their claims and what prescriptions they're filling and know that they're compliant or not, it makes it impossible to try to do the program. So the best fit for a program like that, where you're actually going to tie something to claims and premium, is usually anyone that's self-funded, where we have access to the claim data. And in some cases, if they're fully insured on their medical plan, and they're 150 or 200 or more on the health plan, we've been able to get, the Blue Cross Blue Shields and United Healthcares of the world to allow us to have the claim data to do that as well. So where you can't do that, there is other things you can be doing. You can have biometric screening programs tied to premiums and incentives. It's logistically very difficult to do that. We have many clients doing that as well. You can still carve out your sleep apnea from your health plan and use a specific vendor for that and have compliance related to sleep apnea, because we find a lot of that too, where somebody that's diagnosed with sleep apnea goes in, they get their CPAP machine, their supplies, and then they don't use them, which is a problem. And it's going to lead to other issues over time. So having a program in place that monitors their usage of the CPAP machines and whether or not they're compliant with that you can do outside of a health plan. And many of our clients do that as well. And then lastly, you can have a program in place called CDL management, where you do have nurses engaged with your drivers who are issued a short card. So any kind of restricted medical card, somebody that is in good health is going to go in and take their DOT physical, and their CDL is going to be good for 2 years. Others might be 30 days or 6 months. And in those situations, we can put health coaching in place for those folks to help them get on track so that next time they go in for their CDL or their DOT physical, their CDL is a longer card, hopefully a year or 2 years.
Well, such great insights there. I've got 2 final questions for you, Kim. Number 1, you mentioned an annual report. Tell us how we can get access to that.
So I was referring to the Cottingham and Butler annual trucking compensation and benchmark survey that we've been doing for over a decade. And we do it every year, usually in the first quarter of the year. And the newest survey, by the way, no one likes to participate in surveys. We get that. So we make ours free, but we have one stipulation. If you want the data, which is great data, I have a copy. This is last year's book. So it's filled with some really good information, graphs and charts on pay for drivers, non-drivers, bonus pay, home time, recruiting, retention questions are in here. And then, of course, a whole slew of information on benefits, medical insurance, dental, vision, 401k matches, PTO. All of that information is collected in here. And the only way to get the survey and get the report is to participate. We don't sell it. We don't give it out. So if your viewers are wanting a copy of it, I'll make you a deal. If they haven't participated in the past and they're a motor carrier, if they commit to participating in the next one that we're rolling out in a couple weeks, I will give them a copy of last year's survey. They just need to participate in this year's survey. So the way to get access to the survey is we're going to be sending out an email blast. So many of your viewers might already get that. We also we're promoted through trucking associations, through states and the national ones. But if you go to www.truckingsurvey.com, super easy, truckingsurvey.com, you'll find a landing page that'll give you more information on how to participate. And we will be rolling out the 2022 survey on February 1st is the target date. So really in less than 2 weeks, they should be able to go out, participate in the survey. And then within ideally a couple of months, 30 to 60 days, we have all the reporting gathered, put together, and ready for distribution back out to our participants, again, at no cost.
Well, that is number one. Thank you for making that available to our audience. I really appreciate that. So, Kim, our worlds regularly collide when it comes to the M&A side of things, and people don't really think about this. So, when it comes to the benefits in M&A, where do you see our worlds intersecting, and what's the significance to the buyers and sellers in our audience that might be listening to this?
Well, yeah, I've been on the receiving end of both sides of that in the past 12 months. Actually, I've had multiple clients that have acquired other companies, and I've had a couple that have sold to other companies. One even sold to another client of mine, which was super interesting. In those situations, I would say the one thing that I've learned through that and that I would give advice on for anyone in growth mode or acquisition mode is, we'll have a situation where a client will call me and say, hey, Kim, we just acquired a company and we need to roll them into our benefits, and we need to not have any waiting periods for our benefits. And we need that to start on the first of the month. And it's the 20th. So I'm saying, oh my gosh, we don't have, do we or don't we have acquisition language built into our benefit programs to allow for this? Because if not, technically, that this is not a new hire. They're bringing them on and they need to have a shorter waiting period. So having language built into your plan around acquisitions is key. Just something simple as, if an acquisition occurs, day one coverage will be made available to those employees as part of that acquisition. It'd be a little more formal than that, but depending on, how fluid you need that to be in a quick situation, because we do a lot of times have to get approval from a reinsurance carrier or from the insurance carrier to have a shorter waiting period for a separate or specific class of individuals without having any health information, especially if it's a really large acquisition. You bring on 200 new employees, an insurance carrier is going to want to underwrite that and know what kind of risk they just took on without having to change rates. So if you have that language and approval in place in advance with a company in growth mode, it can make life much easier.
Oh, that's excellent. Last question, a little bit of a wild card, Kim. We're at a karaoke bar, and you've got an option. You can cover Shania Twain, Carrie Underwood, or Reba McEntire. Who's it going to be?
If I had to pick, do I have to?
Of course, you can only sing one song. I've given you some options here.
All right. Well, assuming it's going to be in Nashville, it probably needs to be either Carrie Underwood or Shania Twain.
All right, let's hear what would be your Carrie Underwood song?
Oh my gosh, Before He Cheats.
Oh, I knew it. Kim, thank you so much for being a part of our program here. I really appreciate just the knowledge and the expertise that you've shared with our audience. That's going to do it for us here at the Hot Seat. We will see you next time.